Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're seeing just blood red on the charts. Everything is having a major pullback, exactly as we suggested could happen based upon the measured move of that Alpha 9. Kind of, knockdown that basically just slaps the market down with a bullish crossing of the 9 EMA and the 10 MA on the weekly. And of course, there's a measured move of approximately something between, we can just say 10 to 30% is the range. And so we could, suggest 15 to 20% is pretty reasonable in terms of an actual pullback, which would suggest that perhaps we're at support. Perhaps this is working out on the rest of the markets as well in their own way. We are seeing these kind of pullbacks on the entire market as a whole. As you can see, it's not totally bearish. There's lots of green on the board, but if you look carefully, you do see energy, real estate, healthcare, consumer defense, these kind of reliables kind of picking up, whereas the more risk-on things are kind of in the red, which does suggest a little bit of a flee to safety in the stock market today before the Federal Reserve decision tomorrow regarding interest rates. And of course, what did we see happen today on the market calendar? The consumer confidence index just plummeted to 95.7. Expectation was 97, so we are, dramatically losing confidence in the market. New home sales reflected that, where we can see there was an expectation of an actual increase in new home sales, and instead, what we got was a significant drop, right? And so that is something that could concern the real estate industry. And I've been warning on this channel that, of course, real estate could potentially take a big hit in whatever recession is coming up. And this would put pressure on banks down the line, which is why I believe that quarter 3 profits, right? Quarter 3 earnings is going to be perhaps the key measure in all of this downturn, and that we may not have seen the bottom of the market until Q4 or perhaps even Q1 of 2023, assuming that the recession doesn't become some type of global financial crisis, in which case we'll have to reevaluate. But if it's just a normal, typical recession, then perhaps we could expect to see proof of a bottom during Q4, early Q4, to perhaps latest the Q1 in 2023. And let's just see, what happens with the Jerome Powell tomorrow, because of course the market could take a dump, but it doesn't mean that there's anything wrong. It's just the market responding to interest rate increases as usual, and there is the possibility of a summer kind of relief rally. Assuming that the Fed takes a decent size break from all of its increases, and then we just get to look forward to the earnings down the line. Going to the charts, we can see that the bear flag is basically broken down completely. Of course, I'm using curves on this formation. We could also apply straight lines, and you can see just how it's retesting the underside of that broken down bull flag, where it broke down instead of breaking up bullishly, and now is retesting the underside. So right here is the critical moment for Bitcoin to see, can this mini bear flag that's actually being formed on the on the hourly, can that mini bear flag, bull flag right here, play out a measured move to this level up here around 22,000 and take out this candle, right, which dropped it down. That would be a bullish look. That would get it back into the bull flag, and then bulls would have another chance to try to recapture this 22 to $23,000 area. And I do believe that they would have to capture $23,000 very solidly, right, very solidly in order to have a bullish look on the charts. And so this is going to be basically the goal for the bulls if they're going to recover this Bitcoin chart. If they cannot achieve 23,000, then it's basically a game over. And of course, the ultimate prize here is going to be taking out approximately 24,000, getting into these kind of squeeze plays between the 9 EMA and the 21 EMA, and trying to see if they can break the 200 EMA. Of course, these are the weekly EMAs I'm talking about, because those are the powerful moves. If you want to turn bullish, you're going to have to break those weekly EMAs. But as it stands, right now I have a measured move up to approximately 21,000, let's just say 900-ish, and maybe that will play out. But if we get rejected right here, then that's going to be a bad look. Of course, anything under 20,000, we can just say 20,700 is going to be pretty bearish. So that's it basically for Bitcoin as it stands on this current chart, which is Tuesday night PST around 11 p.m. If you wanted to be bullish, it's not really possible unless you get above 23,000, approximately 150. You do have a chance as long as we're over 21,250, but we're really struggling with this level right now. It does look like a retest of a breakdown. It doesn't really look like anything too amazing here. Should probably delete that bottom one since the downtrend is actually up here. And of course, if we break below 20,000, 650-ish, then we are just undeniably bearish, and we are going to also break our momentum, pretty critically to the downside. Okay, at least our daily momentum there. Stokes will turn up on the daily only if we cross that 23,000, approximately 200. Guys, let's go ahead and jump over to ETH, because the rallies that we've been having recently really have been related to ETH. And so I'm just going to zoom out a little bit on ETH just to give you a little bit of perspective on what ETH is doing. Of course, you do see this channel to the downside. And essentially, we kind of have to figure out where is the mid channel in there. I did see that this is very strong support, very strong resistance, huge bounces off of it here, very strong resistance here, and then we got on top of it. We've been playing around with it a little bit, just kind of snaking around it, and we have recaptured the center of this chart, which is pretty incredible actually. If you look at this line, it's almost playing with it to the dollar, right? To the dollar, it's played with this line that I've basically built out here for you a while back. And so that just shows just how powerful, these type of diagonals are, just how powerful it is to envision in your mind's eye this type of a trend, which, if you just went with like a standard TA, maybe you're drawing stuff all the way out to here, it's all sloppy and this type of stuff. And then, people want to keep their lines, parallel, so maybe they're going to draw it like this, and that's going to get you this point up here, right? But that's not really the critical area of control. It really does seem to be this mid channel here, where we see all these touches getting rejected. And so what we really want to see is Ethereum holding on top of this midline, or is it breaking down to this midline? And I'm just noticing right here as well, look at this perfect touch right there, right to that point where I suggested it could break down to. Of course, we did have our diagonal right here, and of course we had, a couple, pardon me, our horizontal right here. We did have a couple horizontals that we could draw in here, but where did it touch perfectly? You guys know I've had this drawn out. I didn't change it at all. I did not change this white line at all. I did not change this yellow line at all since we were up here. And look at that. Perfect touch there, perfect touch there. So guys, I mean, this TA stuff, you know, it sometimes it's useful. You know what I mean? You can actually get something out of it, and you know, you're not always going to be 100% correct, but you know, out of the last three calls on Ethereum, which is that we would have heavy resistance up in this area, and I'll show you why in a second, even though a lot of people might have been looking a little bit higher, although of course we did have this kind of breakdown wick right here. But we've been trying to play with it, you know, three times, and we weren't able to break it, so we did get slapped down right in this very specific area, and you know, we did just drop specifically to our diagonals there. If we wanted to recover some type of bullishness, of course, we are going to really be looking at, you know, at least on the daily, we'll need to recover 1590. You know, we still have a chance as long as we're above 1520, but I'm afraid we're going to continue to fall if we can't break above this, you know, this 1450, right? So we're at 1447, not too far away. This does also look like a bull flag that could take us into this critical area. I've marked out the candle, but let's see if that measured move aligns there. And yep, yes, it does. It actually perfectly aligns there. The measured move perfectly aligns there, where maybe we don't recapture our short-term momentum, and maybe we can't capture our daily stoke. So overall, we're still, you know, in danger of returning to this bearish downturn. But you know, maybe there's a measured move to be played here, at least in terms of a short trade, right? Again, you'll want to see us breaking above 1450 in order to really start to capture some of that RSI, you know, action in order to even get into this area. But ultimately, if we fail to get above that 1590, it's probably all going to be in vain anyway, and we're likely to smack back down. Now I'm going to jump over to ETH, you know, the professional exchange, because I want to show you just why we filled this gap over here. But you know, the chart really wasn't going after anything except filling this gap on this move, and the market was so excited to fill that gap that you know, it actually opened up another gap on its own chart, and this is going to suggest that probably when it comes up here to, you know, try to recover these you know, these candles and to retest these prices, that most likely it's going to fall back down and then perhaps fill in this CME gap over here, and then we're going to have this horizontal support, and we're also going to have this CME gap that could be acting as support or resistance depending on how we fill it, and we can take it from there. There is this interesting diagonal. You can see we got a nice bounce off of it over here, and we also have so many touches right here that has just been respected absolutely, that it could be that we're also just stalling for time to come down here to fill the gap, and then kind of we may just bounce off this triangle, and that would be a successful retest of breaking down off of this really weird kind of wedge that we have here in order to maintain some type of bullish posture, because that would still be a higher low. Of course, if we do break down it back into this wedge, it is going to be one of these kind of distribution wedges. This is a nice distribution here. And so, you know, if we break back down into this formation and all we were doing was filling in, you know, CME gaps before we break down, you know, it could suggest that the breakdown is going to come. And then from there, you know, where would I suggest that we could go? I mean, this thing could continue to break down all the way to $400 even. You know, some people might not believe that, but it could continue to break all the way down to $400 depending on how weak this chart gets. But overall, guys, you know, my perspective here, bullish over 1590 on ETH. We still have a chance if we can recapture 1520. but will probably continue to fall below 1450. And if we break down below 1275 ish, then probably we're headed to Goblin Town, which is either going to be the support or any number of supports below us, all the way down to perhaps 1400 as an absolute bottom. But let's not go there for now. If you want to talk about ETH on the 4 hour, there are some considerations just in case you happen to be able to see this program in the next hour and a half. Of course, we have 4 hour closings. And so for the 4 hour, basically, we could consider it bullish over 1565. Maybe there's still a chance over 1425. And then, you're going to be just bearish below 1368. So, guys, basically in this area, if we lose this, of course, we're going to be bearish. We're going to be testing some of these lower ends, and we're also going to be breaking down below this mid-level support, which has been just very important for us, as we've discussed it before. So I think that's probably enough for this Trading Tuesday. I just want to give you a little couple setups. We do have this bull flag here, which could have a measured move on both Bitcoin and ETH that suggest it's also probably printing out on a lot of other coins. If you can capture that pop up, right, there might be some type of a trade to the upside. But then I would suggest if you see ETH approaching this level of like 15, 20-ish, somewhere around there, you might want to just consider to get out of that long, take your profits, and maybe consider even the possibility of a short, assuming that this thing proves to be just, another lower high, something like that, right? And so that would be my trade setup for this Tuesday. Let's see. I mean, we can just briefly go over the charts here. We do see that the VIX is, well, it looks okay. I mean, but I don't like the fact that it's recovered this support. VIX, the higher it is, the worse it is for us. So right now it suggests that we could have an increase in volatility tomorrow, right? Because it's regained this support. And so we could have an increase in volatility tomorrow, which could make trading harder, which would suggest perhaps the market expects some type of dump. Of course, the dollar is just kind of meandering around, not really sure what it's doing here. I'm not going to make any kind of call on that. It had a huge spike. Um, this thing gives us headaches as well, right? So if the VIX is up and the dollar is up, that's not good for us. Let's double check to see if USDT is up. USDT just doing what I expected. It basically recaptured this diagonal here a little bit bullishly. So again, just like the VIX, it captured that line bullishly, which would suggest hardship on the charts for crypto and for stocks. Okay. I believe I haven't really updated this one too much because I'm not that heavy on stocks. But yeah, we do have the breakdown on the SPY occurring here. Just a slow breakdown. There is a lot of buy pressure, so I don't know if we're going to hold up here or anything. We do have a higher low, you know, so far, we have a higher high, at least compared to this formation, we have a higher high and the potential for a higher low. Even if we fill in these kind of professional, chart gaps that we have on these lower time frames, you can see this is like an hourly one. We've got like a 4 hour here. Maybe that's even a daily. Yeah, that's a daily gap. So there's a daily gap just like on Ethereum, which, the SPY could come down to fill, perhaps just like Ethereum. And then perhaps if the Fed news allows it, there could be some pop up. Sorry for the sloppy lines on here, just testing some ideas. But the main thrust of this is just the CME gap, okay? And then, how high could we go? I don't know. I just would suggest probably, if we had some type of rally, over the next month or so, then maybe this 4,000-ish area, right? We can talk about 400 or 4,000. They just use different units depending which one you're looking at. But maybe 4,200, or 420, depending on, again, which chart you're looking at. Somewhere in this area is where I think we would kind of top out, right? If we did have that run. But for today, we are looking at the possibility of a dump, and then we can kind of take it from there because, of course, the dollar and volatility is positioned bullishly. So we don't really want to go against that unless we, find out what's going on with the Fed. And the main issue with the Fed is going to be not the amount that the interest rates are going to be, not whether it's going to be 75 or 100 basis points. The market gets it already. Like they're going to build that in, of course. There's going to be some fall, but the market pretty much is understanding that. What the market really wants to see is, does the Fed have any indication for how long they're going to do that for, and what are their goals? Are they shifting? Are they shifting any goals? Are they shifting the goalpost? So that's really what the market is going to be looking out for. And of course, if it's bullish, then perhaps after we fill in a gap down here, which is probably likely in my opinion, just kind of fill in the gap, then maybe we can start to pump up. Maybe this is an accumulation wedge, and maybe we can get that pop up here on the Nasdaq to perhaps 325-ish, which would be something like 13,000. Just call it like a just under 14,000 on the NQ1, right? On the Nasdaq 100, right? So not sure which charts you guys are looking at, but those are the ones that I'm looking at. And then perhaps later we could come down and perhaps Q4 or end of Q3 or even Q1, maybe we could end up with some type of a double bottom, or just there's disaster in the global economy and we end up making lower lows, even, right? For perhaps a fifth wave down, which could take us, all the way to Goblin Town. Don't want to get too much into that. This is just supposed to be a trading Tuesday and for easy kind of setups. Getting a little bit too much into macro, but I just want you to understand the risk that are on the charts right now with that, with Jerome Powell and the Federal Reserve tomorrow in terms of the long-term risk that we have there. And so until then, we are going to just be watching, Bitcoin and Ethereum primarily to see if the markets are turning risk on. If Bitcoin and Ethereum are pumping, right? If they're getting a relief rally, then the market may be turning risk on, and that could be an indication that we are getting closer to a bottom here. Of course, Bitcoin does have this nice trend that we're respecting. So as long as we hold these levels, I honestly can't be too bearish. But as soon as we start breaking down, and again, I've already given you the levels that I have there in terms of, my mind. Again, I'll just repeat it. If you want it to be bullish, then 23,150. These are by daily. Okay, these are by daily indications. It'll change within another day, but at least for now, if you want to be bullish, over 23,150. We've still got a chance over 21,250, and we're pretty bearish under 20,650. Okay, and then is there anything else I would like to point out here? Oh yeah, I would actually on the Bitcoin CME chart. Of course, we are getting a clear picture of how our teardrop and our fake wedge, right? It's not like a real wedge that I'm making. It's just kind of like this is the teardrop wedge, okay? It just contains the teardrop. We did get a kind of little local bottom there on these, kind of middle time frames, right? At least for now. We could break down again, and as I mentioned, like the bottom of this triangle, as I mentioned in a previous episode, the bottom of this triangle can always be redrawn. But what can't be redrawn is the curve. The curve is not easy to redraw. You can bend it a little bit. You can deviate from it a little bit, but if you go too far, the curve, right, this one right here, this curve is going to just get broken. And so what's going to happen is that whenever we broke this, I call it a teardrop, it's just a curve. Whenever we break the teardrop, that's when we tend to get a huge break in the market to the downside. Okay, so be on the lookout for that. I was suggesting that perhaps we could actually break down here, or we could even, do what we've done before in the previous instances of this fractal, which is just have another push, either one or two, just kind of rapid pushes, or just one push to the upside, and then, finally have a breakdown or something like that, which I'm not sure where we would fall to. I mean, we could fall to 16,500-ish. We could fall down to 12,000-ish. Um, it just really depends upon the market, right? And I can't really predict exactly what's going to happen tomorrow. Um, I wish I could. I'd be a multi-millionaire if I could make those type of predictions like Houdini or whatever. But we're just going to be trading what's on the charts. And the reason why I created this kind of like a crazy system is just because, we can push up and we can push up and pull back as many times as we want, but the teardrop hasn't lied. Okay, and so I actually sold around here, around 59,000, and that was a really great point to get out of it. Uh, you know, Over here, I actually warned to get out around that $48,000 area, and so that was a really great warning because we really dumped. And I told you guys the last resort would basically be around $45,000, and I hope a lot of you got out at that time. And then we did break down from the teardrop. And then same thing happened here. We didn't really get the same type of push that we had in the previous instances of this formation. We just sloppily broke out of the raindrop, and you could tell that this was a very sloppy formation, just kind of a middle formation, a little bit distorted, but the overall wicks showed us the same teardrop formation and the same type of wedge kind of backbone to it. And so when we broke there, you just wanted to get the F out of this thing. And same principle here, guys, okay? Like I'm showing you this stuff so that you can protect yourself. Even though this isn't 100% standard technical analysis. If you just follow the logic of what I'm showing you, if we do start to break down here significantly, you probably just want to get out right here. Okay, but if we have a pump, you probably want to sell it, around that previous high, and then take your profit because it's most likely going to turn around if history has anything to say about that, right? And then if it does turn around and comes back to the edge of the teardrop, then of course you're going to be really wanting to get out, assuming that we actually break the edge of this teardrop, which, this is a steep angle, so it could be actually any price there between you know what? I'm not even going to put a price on it. You have to draw this yourself, and you have to watch the price action and see when it crosses the threshold. Because like any diagonal, it's just a dynamic number, right? But again, I gave you the horizontals. I gave you the horizontal numbers for Bitcoin, which you can replay the video and write those down if you haven't, because those will also be fairly reliable, because they are based upon solid indications on the daily and also the 12-hour. Let's see if I can just hide this stuff, and let's go ahead and check our EMAs just briefly here, and this will be kind of it to just wrap up. Let's go ahead and go to the 24/7 prices on the daily. Yeah, you can see all of our EMAs are starting to curve to the downside. We do have an interesting, you know, uh, that 10 MA, the simple MA, is pointed up, which is kind of interesting. But again, it's just a little bit lagging there. The rest of them are pointed down. Um, And so, this thing does look like it wants to curve a bit. Let's see, let's go to the 4-hour, just look at some of our indications. Yeah, I mean, we are turning up on the oscillators. MACD suggests, it's softening. So there's a possibility that we could pop up a little bit. And the RSI did get a confirmation bounce on the 4-hour, which could suggest that this measured move for this potential little bull flag here could play out. Maybe capture this candle around 21,900. But and we are getting a little bit of a squeeze here, so there could be a little bit of a squeeze play on this 4-hour as soon as we really defeat this this 10 MA right here. Maybe we can get a little pop up, and that would suggest a target into this area where you do see all this entanglement of all these different EMAs, so providing pretty heavy resistance just in this $22,000 area. So that would suggest maybe a rejection there, right? Okay, guys, I'm gonna wrap this up, and on the weekly, it just heavily pointed down. We are under that 5 EMA, just really struggling to hold on to the 300 EMA here. Yeah, for wrapping up for real, that was your alpha for the day. Stay safe and happy trading.